All right, good morning, everybody. Okay, so I already have a short in play here. I put it on about 5 minutes ago or so on the E-mini S&P. Still looking for a target of 43.66. Still could get in here. I may add. We'll watch and see what's going on. Dow right now, small Dow is down 91. So I don't have anything on the mini Russell. Already looked at the mini Nasdaq down here. Nothing going on yet on the mini Nasdaq. That's already in a short. Same with the mini Russell. The only thing I had on right now is the E mini. Small Dow also is in a short, but like I said, I'm not trading the Dow. The mini Dow, it's possible this thing could come down. Right now, it's looking like it may want to go lower, but right now I'm not touching the mini Dow. All right, we're just gonna let that go here. So we're just gonna keep an eye on. Let's see here. Gonna continue to watch this mini Nasdaq. We may have to buy an opportunity, but right now I don't see anything. All right, so the only thing I have going on right now, once again, only trading indices this week. Short the mini Nasdaq. I'm sorry, short the mini S&P. Watching possibly for a buy on the mini Nasdaq, but we'll see. It's gonna have to really pull back here before it triggers anything. All right, so just gonna stay short. ES target 43.66. Morning, Glenn. How are you, sir? All right, it's just going to be really quiet this morning. Right now, just small Dow's down 77. So it's obviously going to put us into a lower opening. Unless something breaks and it wants to start going up. But right now, it looks like we're going to have a lower opening on the Dow. Coming in short the E-mini S&P. I may possibly add if we come back up to entry, which is this yellow line. right, folks, just gonna be quiet here. See what we want to do. Like I said, if we can come up a little bit higher here, I will possibly go ahead and add on to this short E-mini. Target right now is 43.66. That's going to be my first target. I could extend it depending on the weakness in this morning. I may extend it further out targets. I don't have anything yet, but they could develop. So right now I'm just going to hang tight here and just let it do its thing. Okay. All right, very quiet, folks. Just very quiet. Just hanging tight short on this E-mini S&P. Mini Dow. Mini Dow is still down 59. You're having a rainy day up there in North Dakota? I think we're supposed to hit the lower 80s today for a high. What is your high going to be up there? So I don't see any really big reports coming out. We had a building permits come out this morning at uh, at 8:30. They were down a little bit. Not sure that's gonna have much of an impact on the market. Holding 50 for a high? Oh my god. Yeah, I'm sure you would rather have the 80s. So you're getting rain, huh? I don't think we have any rain in the forecast here in Texas. It's haven't had a whole lot of rain yet. Supposed to be, they say we're supposed to be wetter and colder than normal this winter. So we'll see if that's the case. We could definitely use the rain. And I was thinking it's going to be, they're saying more mild for you guys up there, if I'm not mistaken. But who knows? They're never really 100% on anything. Just like trading, right? Never going to be 100%. And it's funny. Trading is a funny game. Like I said yesterday, a lot of this is psychological. You got to remember when you're trading, you're playing with probabilities. It's just like predicting the weather. It's only probabilities. It's never 100%. You can get pretty close to 100%, but in trading, to be consistently, I would say somewhere around 70%. That's the best you're ever gonna get. Is somewhere around 70% consistency. That's if you're really really good in terms of predictability, because there's a good portion of trading that's noise related. A lot of noise in the market, a lot of news related. You can't predict that kind of stuff. You can't predict last minute news events. So there's always that fundamental factor or something coming out that's going to put the noise in the market, right? So, but markets, if you can be okay with knowing that you're never going to be 100%, and people keep trying, they have something that's 70%, they keep pushing it, trying to get more out of it, and then they end up changing everything, and then they're starting from scratch again. It's such a repetitive cycle. See these system junkies, they go after, hey, I was one when I first started trading, so I get it. But after a while, if you spend a lot of money on systems, you realize that the best way to trade is to understand how the markets work, right? Just get a good feel for the market, and that just takes screen time. Got to put in a lot of screen time if you want to be a good trader. You can't simplify it by just coming up with some magical formula or an automated system that's you're going to push a button, it's going to make money for you. Don't believe all that nonsense. There are tools that are better than others. There's tools like my patterns that give you high probabilities. And when I say high, I'm talking 70% or so. But still, you can't, every time something happens and you have a loss, you can't start tweaking it, trying to get better. You have to accept the fact that you're going to be wrong 30% of the time, maybe 35% of the time. There's a lot of successful traders out there that make millions, and they're only right in 45% of the time. So, but they understand the market, and they understand price action, and they know when to hold on to a trade longer and when to get out of a trade sooner. And that's really what it's all about. But you got to understand price action. Entries are always easy. It's the exits that you've got to really manage. It's easy to get into a market. It's not always easy to get out of a market. So if you're going to focus on anything, focus on better exits. So we're just hanging tight here. Like I said, I do have a 43.66 target on the E-mini. If for some reason it wants to, if I see a lot of weakness at 43.66, I'll look, see if we have any new targets, and I'll see if I can hold on longer on it. If not, I'll just get out of that 43.66. That's the game plan. So basically, these dots are just, it's representing volume. Okay, so instead of seeing the bars, you're seeing the bubbles, right? The bigger the bubbles, the more volume. Over here, you're seeing order size coming in at different price levels. I do like to watch volume when I'm trading. I think volume is really important. You know what? You're right. Man, I would love to, because I started trading in my early 20s, and I would have loved to have what I have now. But at the same time, I think it is good to look at everything. I mean, you got to see. You kind of have to go through that education, right? You have to go through the indicators. You have to look at all that stuff. The gentleman that got me started on even looking at patterns is a gentleman by the name of Larry Williams. Check him out on the internet. Larry Williams. He's a big believer in trading patterns when it comes to short term. And if you think about it, it makes sense because, first of all, there's no delay with a pattern, right? A pattern, when it sets up a buy, it's a buy. When it sets up a sell, it's a sell. And patterns are kind of, I call them behavioral patterns. They're representative of people's behavior. And a lot of times you can see that, not always, but there are certain patterns in the market that give you kind of a clue of what the masses are getting ready to do. And it's kind of like every one of these bars that you see here, it's almost like a letter of the alphabet, right? And you have to learn how to read the market's alphabet. What are these spelling out? Every once in a while they'll spell out a nice little buy or a nice little short. But it just took me years to find them. And the thing is that whatever you do, and you've heard me say this before, and while I'm not a big believer in indicators, but whatever you do, whatever you find, make sure it works in everything. Okay, so if you're a guy that just likes to trade the E-mini S&P 500, which is fantastic. You can do that. A lot of people just focus on one market. I have, I like that idea. For me, I can't just trade one. I got to trade several. But if it works, if you find something that looks really good, then test it in other markets. If it doesn't work in other unrelated markets, like doing it in Forex, check it out. Maybe with other futures, like look at maybe gold, silver, look at something like pork bellies, cattle, soybeans. If it doesn't work in other markets, it wouldn't be something I'd be interested in, because my thought is that behavior is behavior, and that pattern should be displayed in all markets, should be working in all markets. That will help you build confidence if you have something you know works across the board, and something that just works, say, in the E-mini S&P. Because the action that you see today, the S&P is going to be different in a month, 2 months, 3 months down the road. It's just not going to be the same. It's going to act differently. So when you start looking at all these indicators like the moving averages and the Bollinger Bands and all that stuff, they all have these different parameter sets, right? So you're looking at a 21-day moving average, a 200-day moving average, all those things that you look at. You can't just blindly follow off an indicator. An indicator can give you a visual representation, but I mean, it doesn't take a genius to see if the moving average is coming down. You can see that in price. Price is coming down. You don't have to have a moving average to tell you that. And so, but I think too many people, they get caught up in it because they see a lot of inexperienced traders that are just out to sell you a bunch of junk on the internet or on YouTube, and they put all these fancy things on their charts, and people think that they must know what they're talking about. In reality, professional traders don't do that. Professional traders don't have indicators. Jesse Livermore, back in, the early 1900s. One of the best traders at the time, and they didn't have chart. All they had is tech. He would sit and he would watch the ticker machine. And what he was looking at is he got a good feel for price action. And so you don't even need charts. I know it's hard. I'm a visual guy. I like my charts. But if you want to be a good trader, you got to put the time in front of the market. And a lot of people work. It's hard for them to do that. So I always suggest at the end of the day, if they don't have time to trade during the day, at the end of the day, at least pull up their charts and just look at them. Look at them every night. What I used to do way back in the 80s, I would take a snapshot picture of a 5-minute, 30-minute chart on the E-mini S&P, only the E-mini S&P. Well, at this time it was the big S&P. Now it's the E-mini. And I would just every day take a picture. I had years of charts. Every night I just flipped through those things, just looking at them every single night, figuring that at some point something would stand out. I'd see some sort of pattern, and that's exactly what happened. Let it get absorbed into the subconscious. Subconscious is gonna see things that you may not see, and then eventually it will come to your conscious. So that's what you got to do if you want to be a successful trader. You gotta spend time in front of the market and look at the action. And the other thing is you want to see correlations. What is the market correlated to? So you have the mini Russell, mini S&P, you have the small Dow, you have the Nasdaq. Are they correlated positively, negatively? So like you see the mini Russell going down, it's not unusual to see the Nasdaq going up. Sometimes they all flow together. Some do, some don't. So what are the other markets? What is the overall market? How does it relate to gold? How does it relate to silver? What are they doing? Are we seeing confirmation? Are they correlated, non-correlated? So all of that, it's more of a holistic approach, just seeing what everything is doing, and then those are just additional confirmations. Whether you're going to take a trade or be more aggressive on a trade, you can still take the trade, but maybe if everything's lining up for you, then you can put on some more size. So you got to learn how to adjust size, and there's really not a magic formula for size. I mean, yeah, there's a lot of different things you can do, but at the same time, a lot of it, size is really going to be an opportunity. If there's more opportunity, you're going to put on size. If there's no opportunity, you're going to cut back. All right, so we're about 2 minutes out, so this is the time that I'm gonna go ahead and switch over to Discord. Glenn, of course, as always, thank you, sir. I'm coming in short on the E-mini S&P. I'm looking for a 43.66 target once again. If I see 43.66 hit, and I'm seeing a lot of weakness, not seeing a whole lot of buying coming in, we'll go ahead and recalculate, see if we have deeper targets on the downside, and then hold out for a much bigger move. All right, that's it. Everybody have a great day, and hopefully you can join us again tomorrow. If you have any questions, feel free to contact me via my website, innovativetradingstrategies.com. Check out all my videos on YouTube, and everybody have a good day.